For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. We had Estee Lauder close at $86.31 yesterday, opened at $83.28 today. That is a 2 standard deviation opening gap. It's what I call a Baltimore Chop setup. And if you attended the webinar on Saturday, if you've watched it since, or if you'd like to register for it and watch it now, then what you'll see is this is one of my favorite setups, and it is a very, very predictable move that we're looking for. It's called a mean reversion. We see here that once the stock made its move lower in the first bar of trading and then came back up in the second bar of trading, we had a couple of things that were very logical and very easy to put in place. First off, we had a logical profit target up at the high of the first bar of trading. That goes in line with all this volume that we saw that reversed the trade, right? So the bar opened here, $83.28, as we said, and it made it all the way up to $83.75 and then really ran into some overhead resistance and backed off. So we know that that's the ease of motion that we're looking for, right? Is going to be a move that gets us up into $83.75 with an entry from the high of the deepest bar of the gap. So when I talk in the webinar about the deepest bar in the pullback or the deepest bar in the opening gap, that just refers to we have a lower high, of course, on the first bar. We have a lower high on the second bar. This one, $83 is the high of the bar, so $83.01, $83.02, anywhere up to about $83.05 makes for a decent entry on that. And then the move up to $83.28, this is the first place we're going to watch for an inflection, see if it dips back down again. When it gets up there, logical place to put a stop loss, going to be down here at $82.85. And of course the initial stop loss on this one was more like 25 cents. We were just putting a toe in the water on this one because your real stop, your hard stop, would have been all the way down here at $82.36. That's not really going to work on an 83 entry. We just want to see if it's going to go in our favor right away. It did. Gets up, hits $83.28, keeps going, hits $83.75. I know that Rick managed to squeeze more out of it by using a trailing stop in the room, but if you're playing it by the book, you probably did this with a bracket order, entered the trade at $83 and had a stop at $82.85 for a loss and a stop at $83.75 for a profit. And we can see as the day went on, the levels that we're talking about developed increasing volume and kept on being the inflection point. So we came back down, hit that entry level again, went back up to that target level again, and then eventually, although there were inflections at each one of these levels where we see a bunch of volume, stock is fading down into the tail of the open. And this again shows you why we are not looking for these to close the gap. This is not a close the gap kind of a strategy. This is just we are going to see a mean reversion back into the range that we're expecting. You can see here it made it almost all the way up into the expectancy range for the day. That would be between these pivot lines. Of course, the red pivot was the central pivot. This green pivot is support 1, and this yellow pivot is support 2. That's where we expected to see price travel today. Didn't quite make it up in there, but you can see that this move here definitely represents a reversion to the mean and a movement back up from our 2 standard deviation open. If you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.